Hi, John Dobis from Forbes back at the Money Show. Welcome, Facebook Live viewers. Joining me is Jon Markman. He is with Tech Trend Trader. He's the editor of that publication and Power Elite. John's a pretty smart guy. I've been watching his stuff, reading his stuff since you were back at Microsoft, what, late 90s?
Yep.
What was it called? Money Central, but you had the Guru Corner or the Guru Focus. What was it called?
Yeah, we were really the first organization to offer financial blogs back in 1997 at the MSN Money website.
So this is a guy who does fundamentals, technicals, sentiment, you name it. One thing that we were talking about before we came on here was small caps. Russell 2000, compare it to the SPY year to date, it's a huge laggard.
It's a horror story.
It's a horror story, but why is that? I mean, you think an expanding economy, we're expanding, you would think that a small cap indices would do great. Why is that not the case?
Well, it's been a very narrow market, right? So the S&P 500 is doing pretty well. It's up about 9 or 10%, depending on what it's doing today. The NASDAQ 100, which is the largest NASDAQ stock,
to the moon.
it's up about 20%,
yeah,
even after the recent setbacks. The Russell 2000, which encompasses the best 2,000 smaller capitalization stocks in the market, is only up about 1%, could be a little bit down for this year, depending on what it's doing today. So yeah, small caps, which really have a great representation of what people are actually owning, have been doing very poorly this year. And so there's a number of reasons for that. One of them is that, is the dollar. When the dollar comes down, as it has recently, people are much more attuned to buying large cap stocks because they do better overseas.
Because of the big exporters, right?
Exactly, and they start to shun the small caps. It's all a cycle. So right now, the cycle is down for small caps, but they'll survive to live again.
This Kool-Aid flavor that I drank shows me the Ibbotson numbers from 1926, and large cap stocks have returned an average of 10% a year. Small cap stocks are about 12% a year. Mm-hmm. So if we're in a period where they're lagging right now, does that mean to a smart guy like you that it's time to go in and load up all your pockets in both hands with them?
I wouldn't say you need to load up both pockets, because really the small caps just fell into what you might call a bear market. Just last week they fell below their 200-day average, and they've been below that average for the last 3 or 4 days. So you'd kind of like to see them pop back over before you make a bet on them.
Right.
But generally speaking, yeah. I mean, your antenna have to be up for at least buying the ETFs that cover the small caps. The major one being the iShares Russell 2000, which is IWM.
Small caps have done poorly, but if you break it down even further into small cap growth and small cap value, growth has done less poorly than small cap value. And then there's a DES, I think, that tracks small cap dividends, and it's really eaten dust. Any thoughts on that? Is growth like the only way to go nowadays? Is value investing? It seems that way. The returns.
The thing about growth is that when investors are worried about growth, they want to buy growthier companies.
More rare.
Yeah, because it's more rare. So you want, if you are going to find look at small cap stocks, you do want to look at the ones that have the growthier profiles.
All right, small caps underperforming. Maybe don't load up yet. Look for some technical confirmation. Thank you, John.